Welcome to Florida Man Investing. I am Phil. We're looking at the charts today. We're going to focus on mainly just Bitcoin and um, the stock market today. We'll try to post some NFT stuff over the weekend. All right, so we have 5,000 decliners, kind of a sell off on a Friday. That's not uncommon, really. That's kind of a common thing. But we are down quite a bit. You hear a lot of people talk about, bear market, recession, um, and first glance, you kind of believe them. Okay, but this is a good time to start buying in. We believe this is kind of what we've been doing. Just slowly dollar cost average in. We've been buying uh, dividend paying stocks. We like the monthly paying ones because if you ever need to fall back on income, that's a monthly income that you can get off of investing. You can reinvest, is what we recommend, but if times fall, you know, if it gets too bad, you can take that and use it. And we'll show you how to do that in other videos. But as you see, you look at the markets all red like this, you think that we're just going to zero. But if you look, we do have Apple up 1%, Nvidia is up, and AMD is up. Maybe people are buying some more GPUs for the minings. All right, so now you look over, and here's another one that we would like to show you. Hold on here. Another dividend paying stock. And here's the thing, you don't have to have a lot of money to get dividend paying stocks. Some of these pay monthly, some of them are quarterly, yearly. Look into that. But like this one here is only $15. And if you look at the markets and you hear everyone saying that everything's going to zero, it's crashing, actually the volume actually picked up and people's been buying this share. I believe they're having earnings today, so that's probably why they're up. But still, there is times to make money even when markets are down. So, like I said, when you start seeing articles talking about bear markets, um, when you start seeing articles talking about bear markets and things going down, these are the times when you buy when it's coming down and you sell when it's going up. Um, we kind of been spoiled. The government's been printing a lot of money, and we had a lot of extra money in the markets, and it almost seemed like you could just throw a dart at anything and make money. Now we got to be a little, picky at what we pick. So if you look here, so the S&P 500 right here was the COVID crash. Are we going to come back down that far? I don't think so. As you see, we're kind of just been trending up. Um, but you see it kind of right here is when they started printing money. It seems like it kind of hit a different trend line there and started accelerating. So we will probably come back down to a better trend line um, coming up. But now, as you've seen, there's still stocks that are going up. You just got to be a little more choosy at what you pick, and that's why we recommend dividend stocks. Dividends they're stable than your growth stocks, and that's kind of why we don't really have any growth stocks in our portfolio. We actually use cryptocurrency for our growth stocks, our and then everything else we do the dividend stocks, and we can show you how to do that with 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 the SoFi app. We we're gonna do a whole nother video on the SoFi app, going over everything about the checking, investing, because your checking account, your savings account, on average, people are only getting like 0.06% interest, and SoFi has 1.25 interest for checking, not even savings. That's for your checking account. This is free money that we're just leaving on the table if you're not using them. If you don't mind having an online banking account, yeah, we highly recommend them. It's not sponsored, it's just what we do. We do that. And then we also have the SoFi credit card, which is paying us 2% cash back, which we use to pay our bills. And then we use that to pay for our investing. And so it grows on top of that. Plus, that's also money that you can put right into your checking account and use if times fall that bad. And then crypto, we put a lot of it in um, crypto.com, because crypto.com does have the earn feature. Now, I know the rates have been coming down. Um, and there was a lot of news. I know it's had a lot to do with their debit card. So we don't use their debit card. We only just put the crypto we already have in their account and creates interest. And that comes, you get that. It seems like every few days you get paid out, and it's not much, but it's still interest earned on your crypto. So if you plan on holding it a long time, that's more income that you can get. So now back to, let's go, hold on 1 second here, go back over to the charts. Okay, so also we want to, so just kind of look here. So we do have, Bitcoin did come back down to 34,000, and we did kind of bounce up and back down here to 36. Everyone's saying that we might go down to about 28,000. Like I said, this is a long-term hold. Dollar cost average in. The you and you have a balanced portfolio. That's why we do watch Bitcoin and Ethereum and Cardano. Cardano's been getting hit pretty hard here too, but we're just basically still kind of moving sideways here at the bottom. We think anything under $1 is a good time to stack your Cardano, and anything under 40,000 is a good time. It's still undervalued in our opinion. And Ethereum, anything under 3,000, they're fixing to have a move over to proof of stake, and they're, if you don't know, Ethereum used to be, is proof of work, is where you can mine it with graphics cards, and now you're going to be staking your Ethereum instead of doing graphics cards. So that when they do that, it's going to be a big deal for Ethereum, and we're going to probably see some parabolic moves out of it once that happens. But we don't know exactly when. Is it going to be this year? Is it going to be next year? So again, dollar cost average in, you want a balanced portfolio over crypto and stocks is our opinion, because stocks, if you're in dividend stocks, is paying you. So that is definitely something to consider. All right, so let's see. Looking at the charts, we do have Matic has come way down. I remember it wasn't even that long ago we were shocked that it was at like $1.40, and we're back down to almost $1. That's another one that we do like. Let's see. Yeah, see, Apple has definitely recovered. It's starting to bounce back up there today. All right, guys. I'll let you go. Thanks for watching. Subscribe to the channel. Over this weekend, we're going to post some more stuff on SoFi and how we're using that to create passive income. Probably some more mining stuff over NiceHash. You can make a couple dollars a day depending on what kind of graphics card you have. And in hard times, that might be something that to help you out. Because if you're getting, $20, $30 a week, I mean, not a week, but a month from mining, that might add up, or that might be extra money that if you want to keep it in Bitcoin or Ethereum, whatever you're mining, or you might want to switch it over to dividend paying stocks, or you might want to move it over to crypto.com and get interest on it. There's many different ways to make it, and that's just what we want people to focus on, is to look at getting multiple streams of income. Not just your job. You want to have your job, and if you can start getting investments paying you, or your mining paying you, there's different ways that we do to get multiple streams of income, and we want to share that with y'all, especially with these times. It might be getting hard for everyone, and a dollar here and there adds up over the long term, especially if you're using it to invest while everything's sold off. So thanks for watching. Subscribe to the channel, like this video. We'll catch you next time.